your podcast and YouTube blog covering the German startup scene with news, interviews, and live events.
Hello and welcome everybody. This is Joe from Startuprad.io, your startup podcast and YouTube blog from Germany, covering startups in Germany, Austria and Switzerland. And I'm more than happy to have Benedikt here with me today from Startups from Switzerland. Grüezi.
Hi, Joe.
It is a pleasure to have you here. We'll soon talk about what you guys are doing, because you are, not surprisingly for Switzerland, a fintech startup. But first, I would remind you that this interview is brought to you by Startuprad.io, the fastest and easiest way to look for startups, investors, and corporate cooperation partners. Benedikt, I have been looking at your LinkedIn profile, and as everybody who's listening to this podcast can tell, it will be linked down here in the show notes. And I found that you are a lawyer by training, but somehow you ended up being an entrepreneur. How on earth did that happen?
Yes, well, thank you for that. Or I guess I have to also be very thankful for doing that transition, because it turned out I think I'm better suited as an entrepreneur than just being a lawyer. So I always had a lot of, I always had a lot of fun also in university, delving into the law, researching law, especially when it came to, the intersection of technology and law. So when blockchain came around, I got super interested in this field and realized this is something where I can actually, move something, learn a lot, but also maybe create something new. And while then really becoming a blockchain lawyer, so to say, around 2017, 18, I also realized I want to be involved not just in legal questions, but more broadly, because I'm more of a generalist, I think, than a specialist. And so that's why being an entrepreneur suits me more than just being a lawyer.
But you have been taking a look outside of Switzerland as well. I have seen you also participated in a program of London School of Economics and BEDA, the Peking University, right?
Yes, that was back in 2013, actually, with my other co-founder and co-CEO, Stefan Meyer, with FQX. And we were there actually together, both while we're still studying law at the University of Zurich. And yeah, that was really, really great program where we, were able to immerse ourselves in this back at then really still, quite a new up and coming economic force. If we take the perspective of the last maybe 50 years. And and just looking back now, this has been 9 years, and how much has changed already just in this short time since we've been there.
I see. Your first notable stint has been as a chief legal officer with a Swiss fintech pioneer. How is it pronounced? Lücke?
It's called Lücke. Yeah, it's based on a Danish word, I think, for happiness. Oh. And so this was the background of this startup. It was an amazing experience, being able to be part of this venture so early in the beginning. Lücke really was quite visionary. They have played with and foreseen some trends that are now really relevant in blockchain, but 5 years before. So I joined in 2017. I became chief legal officer and was able to see the team grow also, from just a handful of people to almost more than 100. And that was extremely valuable as an experience, but also showed me again that I don't just want to be a lawyer. I wanted to become an entrepreneur, basically as a result of this experience.
And then you moved on to co-found Lexon. From what I've read, I take it's a kind of a smart contract startup.
Yes, correct. So I think this is where also I was able to bring in kind of my legal training and some of the academic work that I've done in the blockchain and law space. So really looking at how smart contracts and the law intersect to see what are the boundaries of a legal contract or just a contract and how it can be implemented into a smart contract. because these systems, they sound similar just from the terms, and a lot of people use the term. But if you think about it, a smart contract promises immutable execution, whereas the law is actually something that needs to be flexible and adaptable because circumstances can always change. So there are a number of pillars and principles in law that give you the right, as someone who is part of a contract, to step back from a contract. For example, if you've entered into it under some wrong or some misperceptions, and now you have to find a way how to integrate this with the immutable nature of a smart contract. So Lexon really was about creating a smart contract programming language that can be read and written by lawyers. So lawyers would just write a legal code, so to say, in their own language or slightly adapted from English with a particular grammar. And this can then be directly executed and compiled into the leading smart contract programming language, such as Solidity. And this was really amazing. There were a lot of people involved, from academia, but also some people from leading management consultancy firms such as BCG, Digital Ventures, etc. And it was quite a nice experience.
What did happen? Was it too hard of a task to actually get lawyers to code?
So Lexon still exists, and I would still probably consider it still more of a research project than a business. And the challenge really was, looking back, that in 2018, smart contracts were still a fairly novel concept. So trying to innovate on top of a innovation which hasn't reached maturity yet is always difficult, right? So it will still take years before people actually fully embrace the notion of smart contracts. So that's why I believe, the case for Lexon still is there, and I think it has a big potential, but it will take some years until it reaches maturity. And we see how things progress in this space. And already now you can tell that, just 4 years in blockchain can be decades in other areas. And so I guess now people that I interact with on a daily basis, people from the financial sector, are already much more comfortable with the idea of smart contracts. They actually understand what it means. They have interacted with them at some point, whether they're using some decentralized finance application or have minted an NFT or something. So we are progressing at quite a fast pace, I believe.
I see. And then you got to co-found FQX. How did this idea start, and what you guys are actually doing there?
So FQX started when I was still at Lexon, and we were working together with our one of our now co-founders, Frank Wendt, who was coming from a more traditional finance background. So, who's doing trade finance, treasury consulting, etc., for a couple of decades, and really had this hands-on market experience. And his idea was really to digitize the promissory note. Can be, I guess, translated into German in a variety of ways. So, it's either a Schuldschein, but it can also be translated as the Wechsel. And the idea was to digitize this instrument, which has existed for more than 1,000 years and is probably the most standardized financial instrument in the world, and digitizing it using blockchain technology. And this is kind of where we came in. So then I decided, together with Frank, to start this as a business, and with our other co-founders, Stefan, and then later also Philip, who joined a half year later. So the idea really was to digitize the promissory note, to just really merge the benefits of digitization with the benefits of the blockchain, but at the same time, the benefits of having this unique instrument that is known around the world. It's already very much standardized, and now you have an extremely powerful blockchain-based financing tool. And this is what FQX really is all about.
So basically, for everybody who's not from financial services, we're talking about an electronic IOU here. So you could translate it very, very simply into a sheet of paper. I write on it, I owe you 500 euros, name, date, place, and I hand it over to you. That's basically it.
Absolutely. This is very well put, very simply put. And this is all what it's about. It's the simplicity, right? Because we also believe that the financial system everybody engages with today is much more complex than it actually needs to be. And we believe with the powers of decentralization and digitization, as has already been done with other parts of the financial system using blockchain technology, we also believe this should happen for actually debt-based financing. So we believe, in the future, you will just have one basic financing instrument, and it's a digital blockchain-based IOU. And with this digital blockchain-based IOU in the form of an ENote, as we call it, which is FQX's instrument, you can basically fulfill almost any financing purpose, whether it's just getting a bilateral loan between you and another company, but also where you say, I want to obtain liquidity from a variety of investors, and I'm just going to issue 100 of these IOUs or ENotes to investors. And these investors could be anywhere, right? These could be investors in jurisdiction A, these could be traditional investors, these could be very new digital asset investors. The asset could be on the blockchain directly, or it could also be more in the traditional financial infrastructure. So where, let's say, you currently hold your, if you have any Apple shares in custody at your bank, this asset could also appear in this environment.
Mm-hmm. So basically, you are digitizing the IOUs, you make them flexible, and I heard and read something about you guys doing it as a smart contract. Is that true?
So the basic notion of digitizing the promissory note is that in the physical world, you had this paper certificate, right?
Mm-hmm.
And this makes it not just a bilateral contract, it actually makes it a trigger warning here, security. That's not the regulatory term security, but the private law term security. So this is a certificate which can be transferred to any other party with the same rights and obligations. Now, this is not the case just for any contract, right? A contract is a bilateral arrangement, whereas the certificate, ein Wertpapier, can be transferred. And this makes it extremely powerful. And now the challenge was always, how do you bring this paper-based physical certificate into the digital world, where we know things could just be copied, and you wouldn't be sure that there's just one unique object. And along comes, of course, then blockchain technology. And so in the form of a token, now you can have this digital, legally binding, unconditional IOU as an ENote. We can use and leverage smart contract functionality for the delivery versus payment, so that only the token is transferred once the party once the party transfers the financing amount. So in your case, I say, I want to pay you in a month 500 euro if you give me 450 euro right now. So I need liquidity. I'll pay you back in a month with interest. So what you give me is the financing amount, and I give you in turn this unconditional promise to pay in the form of an ENote. So for this, we can leverage smart contract functionality. We can also use collateral, for example, which is very common in the in the secured lending space. So you could say, yes, I give you this these 450 euro right now if you give me 500 in a month. But in order for me to be sure to trust you, I want you to post some ether as collateral, for example. And this is also something we can reflect.
So basically, for everybody who's not into financing, what you just described is what you call a money market transfer, a short-term lending. And as you can realize, it's very simple on what you guys do. I would be curious about a few things here. Now you have the promissory note, the ENote, as a token. Basically, if they're standardized, could you trade them? And the second question would be, you talked about collateralization of those loans, meaning you post something valuable that could be sold if you don't pay up. Could it only be digital items like Bitcoin, Ethereum, and stuff like this because they are a little bit volatile? Or could it also be something like simple securities or even a house?
So the first question, yes, ENotes can be traded. And I think this is also a benefit of them, right? If you have, let's say, a loan with your bank right now, which is just bilateral, it is based on, many, many pages of contract. It's not really transparent for you what maybe the basis is or not. Basically, you just end up signing. And what you have is a contract, but it's not a tradable asset. With our instrument, you generate the ability to transfer it to third parties. And this can be relevant for the investor who says, I want to have the security to know if I need to, I can liquidate it.
Mm-hmm.
Of course, you need a buyer for that, but just generating already the legal and technical transferability
Mm-hmm.
is the first part in that. And now as FQX, we plug into existing markets. So we've entered into a partnership with SDX, which is the digital asset exchange of the Swiss stock exchange. So it's also a blockchain-based financial market, so to say. And soon our ENotes will be then also tradable and transferable on this market. That's the first question. And the second question, you're going to have to help me out right now.
How can you collateralize the node?
Correct.
Is it only digital currencies? Is it securities? Or is it even possibly a piece of real estate?
Yeah. So exactly, this question is a very, very good question. I think right now the emphasis lies on using digital asset as collateral, because in the end, it's with Bitcoin, ETH, and all these cryptocurrencies, you have created very liquid instruments which can be used very almost perfectly as collateral. Yes, they have fluctuations in value, but if you think about it, collateralized lending, as it's done in the decentralized finance space using digital assets, basically has just digitized the Lombard loan, right? Where before, if people wanted to get additional liquidity, but they didn't want to sell their assets, they could go to a bank and say, I have, 100 Volkswagen shares and 100 Apple shares, and I post this as collateral, and now you, bank, give me some extra liquidity on top of that. And the bank says, that's fine. I give you that. You have to pay me interest, and we hold the assets, the securities as collateral. And DeFi has really decentralized this. And I think this is an extreme step forward. But yes, as we progress with Oracle functionality and we progress with the Internet of Things, more and more also physical assets could then be posted as collateral. Now, of course, we could already do that today, to have a physical asset posted as collateral. But the problem is, in order then to really have this delivery versus payment, and if it's not paid at maturity, the collateral is being transferred to the investor, you have to have some form of digital representation of this physical asset. Now, you can do that with, let's say, a tokenized real estate, tokenized bottle of very, let's say, rare whiskey or something. But for this, other parts of the ecosystem still, need to be built. And they need to be trustworthy. And here again, if you have the physical asset, then again, there's this layer of extra trust that's needed. Some third party needs to make sure that actually this is the asset that's referenced, that the token that is transferred also generates ownership of this physical asset. So that's why doing it just with smart contracts and collateralized securities or collateralized digital assets is, I think, the first step.
Sounds very digital, very flexible. And for everybody who's listening to this, not from the financial service area, you now can be a smart ass. You can say, oh, it's a Lombard credit. Mm-hmm. It means, dude, you give me money, I give you securities.
Yeah.
To make it very simple. my understanding is you do this very digital. FQX is working with SDX, not to be confused, my guys.
Yes.
You get it. It's kind of a bit confusing there. But so it's
It doesn't even stop there. The three-letter syllables, you have it just anywhere. If you're in this space, that's basically what you hear almost every day. It's just a lot of three-letter abbreviations for different things.
yeah, it's a TLA, yeah, the three-letter acronym. I understand it will soon be tradable, but you guys, as I've heard, are already running on a bank licensed, bank certified infrastructure, right? Can you tell us a little bit about that?
Correct. So this is the Swiss Trust Chain, which is a permissioned blockchain. It's a private blockchain. It's maintained by Swisscom and the Swiss Post. And for us, this was relevant to in the beginning to start with, because we wanted to prove, in a sense, to the world that our infrastructure, our instrument, the ENote, can be used from really a big public listed company to a small SME, all over to someone in the crypto space. And so to generate the trust for these more traditional companies, having the Swiss Trust Chain was really great. But now, as the blockchain world is also really progressing, and more institutional companies, like large companies, but also institutional investors, are embracing the idea of interacting with a public blockchain, we are also expanding, and so FQX will soon also be available on a public ledger.
I've also heard you talking about creating an ecosystem with more and more startups working into this system, working with the system, earning money there. Can you explain us a little bit? What are you looking for here, especially addressing the startups out there that are interested in, how could we work together here?
Yes, so that's a very good call. So I think there's two ways, right? We of course invite every startup in the fintech and blockchain space, or also outside of that can add value to what we're building, to have a discussion with us. And FQX is building the decentralized infrastructure for the future of finance, and it's the decentralized debt infrastructure that we're building. So if anybody is working to also provide one cog in the wheel for this future of finance, then we all want to work together. And this is what I really love about this space we're in, this blockchain space. There's a very different mentality, it seems, than compared to traditional finance, or TradFi, as it's called. And that is, people know what they're currently building is, could be quite impactful for a new, more equal, more accessible, and more just, simple financial infrastructure. So there is not this notion just of competition that, you're working against each other, but you're working together to build a better system. And so that's why we love to work with other startups on this. And this could be anything from companies, again, as we said, building a better layer to collateralize physical world assets into the blockchain. Companies which have, for example, a very novel approach to having a AI-based credit rating, which can be very helpful for an instrument. So there's a number of things that we can't do and we don't want to focus on, but that need to be part of this new ecosystem. That's on the side of the collaboration. On the side of users, I think what we are building is also a great way for startups to obtain debt financing. Because if you look at it, many startups, especially those ones who are on a high growth trajectory, they have a lot of access to equity from investors. But as soon as they want to get debt capital, and they go to a bank, the bank will treat them like any other SME. They don't really believe the high trajectory they post with the numbers. They don't believe in the potential per se of these high growth startups. So what we see is really that you have companies, maybe even some unicorns or multicorns. If they want to get a bank loan, they still have to pay, as much as your maybe, bakery on the corner, and have to pay huge amounts of interest rates to the bank. And this is, I think, very cumbersome. And this is not the way I believe the financial system should work. So we believe investors would be willing to more directly finance actually also these high growth private companies, such as startups. And our instrument could be actually a tool to make this connection, to create this more direct access. Because, as many investors take a bet investing in the equity of startups, I think some of them would also be willing to more directly lend to high growth companies using our instrument.
This is almost a little bit spooky because it totally fits. We did not talk about this before, but my next question I prepared is, when does it make sense for a startup or a company out there to consider your marketplace for fundraising?
Well, there we have it. I think what's important to note here is FQX is more than just a marketplace. We see ourselves as an infrastructure, and we want digital debt to be registered, issued, and transferred, and eventually also to be traded on our infrastructure. And so our infrastructure can be accessed either directly. So if someone onboards on FQX and they can, make a peer-to-peer transaction with another company, another investor, but we can also onboard existing platforms. So if there's a fintech platform, for example, out there, which is already doing peer-to-peer lending and they're connecting companies with investors, we can increase or expand their product offering or their product universe by having them now be able to use the ENote, which is something, again, it's a security. It has an ISIN number, an ISIN number. So this makes it integrable into the traditional banking system. So this is why we're also integrated into a number of startups actually that have financing platforms. And on their financing platforms, you can use ENotes, our instrument.
So that means they have to go to a different place in order to get funded via an ENote. We will link your website down here, and I do assume there will be a few links to the respective platforms. Talk about funding here. Your current investors include Early Bird Ventures, 6 fintech ventures, and several business angels. You raised $6.7 million so far. Would you be open to talk to additional investors?
Sure, absolutely. We're planning to do a follow-up fundraise still this year in the next couple of months. And we are looking for additional investment, and our investors have to meet, let's say, a couple of criteria. So we want to work with institutional investors, work with venture capital funds that have, let's say, a experience in blockchain, that are willing to work together with a startup that has a really, let's say, grand vision for what we want to achieve and how we want to change the financial infrastructure. So to the, let's say, brave investors out there who really believe in a vision and believe that if you work hard towards it, you can achieve that. Very, very open and happy to discuss with you. So we're already, of course, have set our eyes on the investors we want to have for this round. And who knows, maybe there's others out there that would also be interesting.
Well, we almost talked now for 30 minutes. So everybody who'd like to learn more, you can go down here in the show notes. There's a link to your company website, as well as directly to your LinkedIn profile, where people and investors can reach out to you. Only thing left for me to say is thank you very much. It was a pleasure having you as a guest.
Thank you so much, Joe. It was a pleasure talking to you.
Have a good day. Bye-bye.
Bye.
That's all, folks. Find more news, streams, events, and interviews at www.startuprad.io. Remember, sharing is caring.